Good morning, everybody. Welcome to our Berlin property webinar. Thank you very much for taking the time out of your day to do this. I hope everybody's sort of lockdown is going as smoothly as possible. My name is Richard Bradstock. I'm the Director and Head of Middle East, and the other chap you can see on your screen there is Will Page, our Sales Director here for the Middle East as well. So what we're going to be talking a little bit about today, if you can move a slide on, Will, is as advertised, we're going to do a little bit of an overview on the German economy, the macros surrounding that, why investing in German real estate works, why Berlin particularly, talking about mortgages and tax, and then we're going to finish with a little bit about our new launch, the Ambassador in Mitte, and we'll take a few questions at the end. What you'll see on the right-hand side of your screen, on the box that's popped up there, is that there is a section for questions. We'll do questions at the end, and you can type them in there, and we'll field those, and we'll answer as many as we can at the end. So, before, again, I think most people on this call will probably know who we are, but just to be clear, IP Global, we're a Hong Kong-based investment company. To date, we've bought and sold over $3 billion worth of property around the world, and we've got offices throughout the Far East, Middle East, Africa, and Europe. Moving on to our business model, I think what makes us a little bit different is the underwrite model that we use on a global scale. So what this means is that we are effectively a co-investor alongside our clients. So we are asking you to take a risk, obviously by buying a property, but ultimately we've already taken that risk. We've put money down at the beginning, and we only make our profits upon completion. So everything that we're doing is aligned essentially with our investors, and the fact that from a research point of view we have to get it right as much for ourselves as for our clients, obviously that is that's a big sort of motivator on our part. So sort of to correlate with that, we do every single part of the process. So the idea is, obviously we've identified the right property in the right market at the right time. We can then help you through the purchase process. We can help you arrange the mortgage. We can source tenants for you through our sister company, Complete Lettings and Management, and then we can manage that ongoing property for you as well. So at this point, I'll hand over to Will. I mean, obviously, we're all sitting in lockdown thanks to COVID-19, and I think one of the things we want to stress here and talk about is risk, and hopefully over the next few slides you will see why we believe that Germany, and Berlin particularly, offers a much less risky investment option than some things out there at this current stage. So at this stage I'll hand over to Will.
Perfect, thank you, Richard. Just to echo Richard's comments, obviously hope everybody is safe and well, and look forward to seeing you all face to face as soon as possible. Right, just to start with, a little look at the German economy. We only ever buy into economies that are strong, and I think we can probably be pretty quick here because we all know that Germany's got a very strong, very diverse economy. Interestingly, unemployment last year was at a record low of 3.1%. That is less than half of the European average. And I think another notable reason why Germany's been doing so well is because of the unique benefit it has being in the euro. So that sort of weak currency that it has enabled it to have a very strong export market. I think we'd all agree if Germany wasn't in the euro, then it would have a much stronger currency. So just moving on to sort of some of the key reasons, some of the key macros as to why property in Germany is a good investment. One of the key things here is home ownership rates and transaction levels. What we've seen is that transaction levels have been increasing year on year for the last 10 years. There's a graph on the right hand side there that shows you all the different sectors of real estate, and the green element is residential. And you can see that since 2010 up to the end of last year, pretty much 10 years, transaction levels have gone up more than 7 times in residential property. So there's reasons why. One of the main reasons is that rents are rising, particularly in major cities, and interest rates are very, very low. So that is basically making it much cheaper for young Germans to go and buy a property than rent, and that is certainly part of the driving force behind that. There's a bit of a change in mentality that young Germans now want to own a home. Obviously it's cheaper, and also the fact that homes are going up in value make it an investment. So definitely a change in mentality going on as well. And then having a look, just interesting, at the bottom there, you've got a graph that just shows you how much money is pouring into the different cities across Europe. And that shows you that Berlin has risen up from nowhere really over the last sort of 4 or 5 years up into second place. So 12 billion euros worth of real estate was invested, which is a big number.
Just, Will, if I may add just a stat on that as well. There's a really, just to demonstrate the rise in home ownership in Berlin itself, particularly historically. I mean, even as recently as sort of 5-6 years ago, 90% of Berliners rented property and 10% owned their own property that they lived in. Today, that's 84% and 16% that own their own property. So that is a really quite remarkably quick sea shift in terms of ownership rates, and is only accelerating for the reasons that Will mentioned.
Perfect, thanks Richard. Just moving on to sort of interest rates and currency. A lot of our investors are obviously sort of US dollar based, and it makes a lot of sense clearly at the moment to be investing US dollars into some of the weaker currencies, obviously one of them being the euro there. So you've got a 10-year graph of the US dollar versus the euro there, you can see. And also interest rates, you can see how interest rates have been tumbling over the last few years. The dark blue line on the left-hand side of that graph shows you the 5 to 10-year mortgage rates dropping, and they've been dropping since 17. They've dropped even further. So this is definitely one of the driving factors for local demand and international demand. Just moving on to mortgages, there's a few key differences to some of the other markets that we invest in. One of the benefits is that before we actually launch a project, we already know which banks will lend. They've already given us confirmation that they will lend on that project. The mortgage offer in Germany can actually be signed when you're buying off plan. So you can secure the terms, you can secure the rate at that time. There's a lot less documentation required by the lenders than other markets. And the affordability ratio is much easier. So you only need to be earning 30,000 euros per year to actually qualify for an investment mortgage in Germany, which makes it very affordable for many of the clients that we're speaking to. To date, also interestingly, we've never had a mortgage offer turned down. So we've done 14 developments in Germany and never had a client turned down for a mortgage. Obviously, we do a fair amount of vetting those clients to make sure that doesn't happen. Loan to values, knowing what you can borrow against the property that you buy. Again, in Germany, that is confirmed before we actually proceed. So we know the loan to value the bank will give on that particular unit. Very age-friendly mortgages. You can borrow up to 90 years old, so you can really stretch out those payment terms. And then very, very competitive rates. For international clients, we can get rates anywhere between sort of 2 and 2.9%, and we can even fix those for 10 and even up to 15 years. So just very, very compelling story behind mortgages in Germany.
I think also, again, if I may add, I mean, on that, clearly, we don't quite know where the world is at the moment. We don't know where the world's going in terms of how long we're in lockdown, all those sorts of things. We don't quite know how this will affect liquidity in markets and lending. And so any market that has an off-plan mortgage scenario where you only get the lending having already exchanged contracts at a latter date, clearly there is a risk there. And I think, in times like this, when it's very volatile, investors are often looking for the least risk opportunity that you can find that will still give them a decent return. And this is very much Germany, given that ability to secure your mortgage now for something that isn't actually being completed for another year or two or whatever it might be. And so this means that if in the worst case scenario you were to lose your job as an investor, you've actually already got everything secured. So there's no risk with that. I mean, moving on to taxes. Again, there's a couple of major tax advantages or one in particular with Germany. So this is a federal law, and this relates to the capital gains tax. If you buy a property in Germany, what they tend to do is they will charge you a little bit more than you might be used to in a market like the UK, albeit stamp duties are changing for the worse in somewhere like the UK as of April 2021 anyway. So that will put that more in line with this. But what they will do is they will charge you in Berlin, they will charge you 6% stamp duty on the way in, or transfer tax. However, on the way out with the capital gains tax, if you've held that property for 10 years, you're effectively exempt from paying that tax. So in a market that is, is almost certainly the hottest market in Europe in terms of capital appreciation over the next sort of 5-10 years, that is a massive gain that you can make when you compare it to capital gains laws and bandings in anywhere from France to the UK to the States. Anywhere, any mature market will have this, and so that is something that will really beef up your returns on the longer term. From an income tax perspective, it's for those of you that are familiar with the UK, it's much like the UK used to be in terms of being very tax efficient and being able to deduct interest rates, running costs, all that sort of thing. So as long as if you're buying 1 or 2 properties and you're borrowing, you really shouldn't be paying any tax. We have more in-depth tax guides and so on, which we'd be more than happy to share with you if you would like afterwards. But what this hopefully shows you is that whilst there are some costs on the way in, effectively this is offset by the fact that there's very little cost on the way out. So just moving on in terms of why we're focusing on Berlin. I mean, it's also worth noting that we're doing a few bits in Leipzig as well, but today we're talking particularly about Berlin. Any property market is driven generally at its baseline by supply and demand, and what you see here is the residential completions being the purple line, peaking 20 years ago and then declining dramatically. And given the population increase over the last sort of 15-20 years as well, and in the foreseeable future, there are more people moving to Berlin than any other European city. What you see is a hefty imbalance in terms of that supply and demand. The Secretary of State for Construction and Housing estimates that the city requires 20,000 units to be completed per annum up to 2030 in order to meet demand. And as we'll talk about a little bit later on, it's increasingly difficult to actually get planning permits and so on in Germany for various reasons, and that the supply coming through is way below that. So on a very basic level, we expect prices to continue rising. So in terms of, one of the other, I mentioned just now that there are more people moving to Berlin than any other European city. One of those reasons is job creation. You've got some very big names offering a lot of jobs. You've got some really good stats. So 250,000 new jobs created over the last 10 years. Berlin's a city of 4 million, just under 4 million people, and it's become. Whereas, forgive me if anyone's from Berlin on this call, but I think it's fair to say that 20, 30 years ago, it wasn't the nicest city to live in. It's brilliant. It's such a cool city now. I can tell you that for nothing. It's such a good place to be, so vibrant. And part of that is in this job creation and people moving there because there are jobs and because it is a city that's a very good place to live. Will, do you want to talk about this one?
Yeah, sure. So part of obviously there's a lot of jobs, a lot of sectors that are moving to Berlin because it's much more affordable for companies to come and set up and rent an office or buy an office and employ staff. So there's certainly an affordability drive by companies looking to move a presence to Berlin. One of the big things that's been happening is the tech scene. So there's an area called Media Spree, which you can see in this image on the right hand side on both sides of the River Spree, which is actually on the left hand side is actually where the Berlin Wall used to run. And that is a big area for tech companies. So you've got around about 250,000 people working within Media Spree in the tech and startup business. So if you are a startup company, then you can see there 67% of those companies are choosing Berlin to come and begin their operations from. So this is a big part of the investment case for sure. In terms of infrastructure, I'm not sure if people have been to Berlin. Certainly if you've flown from an international destination, sort of Hong Kong, Dubai, New York, Singapore, you can't actually fly to the capital city of Germany, which is mad. That's changing. So Brandenburg Airport, which is running very late, but it is opening. Next year is expected to open, and that's going to take the city to the next level. That's going to bring even more tourists into Berlin. That's going to bring even more potential businesses to the city. But it's just mad if you think about it, that the capital of Europe, and you haven't really got a major international airport. So it's a big part of what's going to drive the city forward in the next 10 or 15 years. I think it's also worth noting students. It is the #1 city for students in Germany, 185,000 in total. And obviously that puts a lot of pressure on the housing market year on year. Notably, it's free to actually go to university in Germany. And previously, many students got themselves educated in the city. The city was struggling. The big companies weren't employing people there. So then they left. They went to work in Frankfurt or Munich. Whereas now what's beginning to happen, obviously, is that the jobs are in the city now. So many of those young graduates are remaining and getting well-paid jobs in the city. In fact, some of the highest paid graduate salaries are now on offer in Berlin. So that's a big part of the city, and sort of how young it is.
It's a very well-educated young city. I think it's, as it says there, it's one of the youngest cities in Europe in terms of average age. And when you've got that sort of vibrancy plus education, inevitably that leads to ultimately economic wealth creation and demand for housing. So in terms of value, so there's some stats there in terms of some of the key locations within Berlin and how they've performed over the last few years, and what you'll see is some really outstanding numbers in terms of growth. However, when you look at the international comparison below, what you'll see is with Berlin, for prime central Berlin property, a sort of average euros per square meter cost of just under 10,000 euros per square meter, which is clearly a significantly lower level than London, than New York. Actually, London's even 2 or 3 years ago was significantly higher than that. So, what we're saying here is that ultimately, given the supply and demand dynamics, given the job creation, given the students, given everything that we've talked about, and despite the growth that we've seen over the last 3-4 years, 5 years, this is primed to move forward, from a capital value perspective, significantly. It's probably, it's one of the only locations across Europe where you could probably comfortably see it getting close to doubling or doubling in value over the next sort of 10 to 15 years, as opposed to, I think it's difficult to say that about some of the other cities on that list, where ultimately the growth is likely to be slower for many different reasons. It's also driving the rental market. One thing that Will mentioned earlier at the beginning was obviously more Germans are starting to buy property because interest rates are so low and because pressure on rents are so high. What this of course means is the advantage from a landlord's perspective or an investor's perspective, if you can get in, what you should be able to see is significant growth on your asset from a rental perspective moving forward as well.
So just moving on to sort of predicted returns, what we've got here is a report that's produced by PwC pretty much every year. It's called the Emerging Trends European Survey that they do. And they look at all the European cities and sort of rank them on their potential for growth, basically. And you can see here that they've scored Berlin second place for overall prospects for 2020, and then third in terms of rental growth that's expected, as well as capital value growth. So it's just good to see that the experts agree with us, and all the reasons that we've been through are why, you know, PwC are predicting Berlin to be one of the top performers in Europe. You can see in 2018 it was ranked the top global city, and then it was second place in their standings, obviously, which for 2020 for overall prospects. So
I think
lots of positives.
Sorry, Will. My apologies. I thought you had stopped. I think just something to add there is also, you know, if you look at the table on the right with Berlin in third place, you know, interestingly, top of the table there is Athens. However, I think everyone would agree that the German and Greek economies can't really be compared, and yet then, you know, there's a 0.3 of a difference in terms of predicted sort of outlooks. And so with that in mind, we sort of looked at all of this and sort of thought that sorry, I think I muted myself briefly there. Given the economy and the risk that you have in a Greek economy compared to the German economy, for example, Berlin sits as the best bet for us in that list. So to talk a little bit about our previous performance in Berlin, we've at the Ambassador, which we'll talk about in a minute, is our 15th development that we've done. As of, or once a couple of completions happen over the next month or so, we will have 11 out of those 14 developments completed and handed over and renting. So we've been doing this quite some time. What's interesting about the Ambassador is the most central thing we've ever done, and we'll move on to that in a second. To give you some numbers in terms of that performance, so these are we've used Coda as an example, which was a development we did back in 2017, 48 units. We've used this as an example because this is a very similar style of building. This is micro apartments and studios, which you know, is a relatively new sector, but again, we'll talk about that in a second. But just to demonstrate as to how that's performed, over the last 3 years, we've seen our valuations indicate an increase in value anywhere from 27 to 45%. And they all rented out, I think roughly 156% of rent was achieved versus the projected rent that we quoted. The other development on the right-hand side is a more typical, you know, 1-2 bed development, but again, what you'll see is, you know, some significant asset value increases. And I think, you know, our firm belief, as for all the reasons above, you know, we believe that you'll see some very steady, good growth moving forward on the Ambassador as well.
Thanks, Richard. Okay, so the Ambassador is the new project that we've literally just secured. So just 2 weeks ago, we agreed to underwrite the scheme. So we've purchased all 77 units in this building. This is a developer that we've worked with before called Adam Europe Real Estate. It's a 2-year build, so completion is Q2 2022. And you can see there the price ranges on the right-hand side. So just to show you sort of where this is a very zoomed in map of the city centre. And where you can see that yellow dot is the location of the Ambassador. That area there on that side of the river is the Ambassador, the embassy's locations. That's where the majority of the embassies are located in the city. So we've got a map, we'll show you some of the key landmarks in a minute. But you can see on that map, Checkpoint Charlie is a 7 to 10 minute walk away, which is to the left of the site, and then to the north, you've got sort of at Alexanderplatz and the Berlin Tower, which you can see here. So this is a great map which just shows you how central the building is. You can see the Chinese embassy on the right hand side. So yeah, as Richard said, it's the most central location that we've been involved with to date.
I think to add to that, there's it's worth noting that there's a couple of embassies sort of highlighted there. I think you've got the Australian, I think there's the Nigerian, I think it is just around the corner as well. So in terms of expected tenants for this building, you've obviously got the young professionals who are choosing to live and work centrally in Berlin, and they want to be in amongst all the action. So rather than travel half an hour into town and pay the same rent for a slightly bigger place. But one of the things we are anticipating is that actually we end up with some business in terms of tenancies from the embassies, given that we're right in the heart of the district and the people they have coming in and out.
And what this slide here shows you is sort of a typical floor plate, the way the building is designed. Many of the units have got balconies. Some of the bigger units have got balconies on both sides and plenty of lights. Although they are quite small units, they're designed really well to a really good specification to make the most of the space and the sort of living environment.
Yeah.
So just to move on through sort of a little bit more about the Ambassador, because this is a building that all the apartments are quite small. It's kind of known as a micro apartment building. And the reason that there is a sort of rise of these types of buildings in Berlin and in other major cities is all of the reasons that we've explained to you in this presentation. It is the rental growth and the price growth that the city's been seeing. So many people are simply being pushed out of the areas that they want to live in. So we're seeing a lot of demand for smaller units. People want to be in the action at an affordable price. And there's a quote there from the head of residential, which is and a member of the RICS, who just says that, next to the United Kingdom, France and the Netherlands, German market for micro apartments is one of the most important destinations for investments in Europe. So there's no doubt there's high demand for smaller units because people want to be in the action and they want to be able to afford to be there. There's communal facilities in this building. On the first floor, there's a residents only sort of podium level, which is going to be an outdoor fitness area. And then on the ground floor, there's a bakery, a supermarket and a restaurant going in as well.
It's worth noting, Will, here as well, that literally 20 yards, practically in the same building, is an access to the U-Bahn station as well. So from an access to the transport point of view, you are able to access anywhere in Berlin a 20-meter walk from the front door of the building. So you're plus, of course, you can walk or cycle pretty much anywhere as well. So the transport access is very, very good.
Yeah, it's a good point, Richard. In terms of sort of going back to the map here, I don't know if you can see my cursor, but just on the other side of the river is Media Spree, which is the area we talked about where all the media jobs are clustered. So, again, you've got 250,000 young people working in that area that all want to live near to where they're working, obviously. So that's just another employment node right by the location.
So in terms of payment process, IP Global, so if you did decide you wanted to explore this further and reserve a unit, there's a €3,000 reservation fee. You then move through the process to notarization. So for those of you that haven't done it before, notarization in Germany is similar to what we'd call exchange of contracts in the UK. It's basically when everything becomes legal. And it's also when the title is registered with the German land registry as well. So your security is achieved right at the start from that perspective. 30% is then due 3 months after notarization, but not before September the 30th. So what this means is that essentially that's effectively when the first all German property is basically off-plan property is built around stage payments linked to construction, and so that's when the first construction stage is achieved, and then all remaining payments are in line with that construction. Mortgage finance is up to 65%. So what that will mean is that you would need to pay your notarization costs up front, which includes your 6% transfer tax. Then in September, the 30%, and then in roughly a year's time, there'd be a further 5% to pay, and then the bank would maintain the rest of the payments. It's worth noting that you don't need to go to Germany. You don't need to do. It's not particularly arduous in terms of a transaction, thanks to the fact that the most difficult bit is actually just going down to, well, particularly probably currently, is going down to the Berlin consulate behind the old zoo in Dubai, or wherever you might be. You need to find a German consulate, and they will witness the power of attorney and the document signings, and basically you send those back to the lawyer, and the lawyer then acts on your behalf. So it's actually a very straightforward process.